Hello everybody, welcome to this special presentation. Today we have the honor to host again Mr. Michael Dehn, CEO of Jourdan Resources. If we take a look at this company, it's within a tight neutral range though. At 10 cents, this is where the stock will be a buying opportunity. So Mr. Dehn is with us to tell you why his company should represent your potential next investment. Mr. Dehn, thank you for coming by again.
Christian, thanks for having me.
Excellent. Now let's talk about the phosphate market.
Sure.
Since you last came in April 4, 2014, has it changed by that much?
In North America, there's definitely a change. There's a net importing. The U.S. had been a net exporter of phosphate. At the end of 2013, Agrium, which was Canada's only phosphate producer, shut down its only producing mine in Canada in Ontario. So we've had a decrease of production in the U.S., a total cancellation of any production or closure of mines in Canada. So Canada now is a 100% importer of phosphate. And the U.S. is a net importer of somewhere in the range of 2 to 4 million tons per year. So we're looking at the North American market, which had been pretty much in balance or in surplus, is now in deficit, and we're importing all of our phosphate for Canada and a good portion of it for the U.S. as well.
But as a potential producer, as Jourdan Resources, how would you intend to benefit from that with the U.S. being a net importer and with Agrium, one of the biggest players, shutting down its mine in Ontario? Do you think it can survive?
I think it's actually a benefit because now you had mentioned in the intro about Mine Arnaud getting permitted earlier, and that's really good for the market. It gives us the opportunity of some confidence. Mine Arnaud has been on the books for a long time. Investissement Quebec should have a little bit of leverage too, and they had a hard time dealing with some of the local concerns. I think the local concerns are never 100% covered, but I think they've addressed all the issues. And you know, as a responsible corporation, I'd say Investissement Quebec is held at a higher standard than a lot of other groups. And their partner Yara, which is a Norwegian company. Norwegian companies are some of the the highest standards internationally when it comes to environment or any human rights standards. So they, I think they're very concerned about the needs of the community. But to have this mine coming on stream in Canada, and it's still going to be a few years away, is very timely because we're looking at almost all of the productions coming out of the Middle East or North Africa, and logistics costs are there. I mean, if you have a shorter transportation time, if you can go with smaller ships, closer to market, there's all sorts of advantages to the end users. I mean, I think there was one shipment last year that was coming into Quebec, and a shipment was turned away because there was contamination with high cadmium or high lead. There was something wrong with the order. So if you can mitigate those kind of headaches, because all of a sudden you're out of pocket or out of time for just-in-time delivery almost for some of these materials, it becomes very important. And to have a local source, if it's not 100% of your supply, at least it could be a good portion of it, and it's de-risking your business.
Now, one of your biggest strengths as Jourdan Resources is that you guys have been able to be strategic in your properties. One next to Jourdan Resources with like a Paul project, and also one next to Mine Arnaud. So let's start with the Mine Arnaud that has received a provincial approval. How will this impact you positively or negatively?
Sure. I mean, most mines it takes, say, from discovery to production 10 years. That's a reasonable time frame. Mine Arnaud has about a 20-year mine life, give or take a couple of years. So if you look at where we're situated, we're within 20 kilometers of their planned property, probably a little further away from their processing plant. But realistically, it's an opportunity for mill feed for that plant to continue beyond 20 years. So with the property we have called West Arnaud, we're close to the producer, or we will be close to the producer who has a plant. I don't anticipate there's any economic benefit for us to build our own processing plant, but to permit a mine, get it ready to ship to someone else who will be processing it. There's a sort of practical use for that property, a practical path to follow. So it's not like we're just throwing our hands up in the air and we're going to be the next producer, but look, if you're going to be there 20 years and you're going to put the capital at several $100 million, I think it's like $700 million to put their mine into production, and they'll have the port facilities at Sept-Îles, they have rail facilities at Sept-Îles. What's the cost to go 20 kilometers rail to our site to rail to their plant versus putting a new mine somewhere else? So there might be some practicality, and I mean, we're still a long way away from any of that happening, but there's sort of the blue sky or the opportunity with that property.
Now, with this approval by have you started to knock on some doors by institutional investors to say, hey guys, I have a project near Dehn, one next to Mine Arnaud?
In 2011, would have done so. And the market from junior miners is still beaten up really badly.
Yeah.
Institutional investors won't look at anything probably under $20 million market cap, except for a few of like SIDEX here in Quebec, and now there's a new natural resources fund. I think it's about $1 billion that's set up. And I think they're still trying to get their feet wet because that's a relatively new setup. And SOQUEM does a few deals as well. So you've got these deals going, and then when you get to the size of FTQ or some of the other investment groups here, they're looking at a larger market cap. And we're sub $1 million market cap right now. The market's really hit us hard. And I think the opportunity there is still with high net retail or retail investors, and where they're looking not just for a 5 or 6% gain, but they want 100 or 200% return. And if you go back, I mean, we've had to do a consolidation because we were trading so poorly. Now we've consolidated. If somebody buys 200,000 or 300,000 shares in the market, what's going to happen? Well, the share price will probably go up more than 1 or 2%.
Now, you mentioned something interesting here, like retail investor, which is most of most people of our audience. Usually when there's a junior company, the things that tends to make the junior company price surge is whenever they have some nice drilling results.
Sure.
So is there some capital that will be allocated to the Decimulate project that you intend to?
Absolutely. Decimu is still our main project of focus.
Is it the one next to Minarno?
No, it's actually sort of halfway between Minarno and Ariane's La Capelle. So, but it's actually an older project, and it was discovered by a predecessor company to Jourdan. And the reason I got involved with Jourdan was because of Decimu. I actually liked the property. I'd approached Jourdan, asked them if they'd sell it. They said, well, our CEO wants to retire. Why don't you come run the company? So that's how I got into the whole project. It's just a very, very big footprint, all near surface, easy exploration. It's been a tough market to raise capital in, but we're only going down 75 meters. We're not going down 100 meters or 200 meters, so we can drill 2 holes a day when we're drilling. The continuity has been very good. I mean, we're getting widths that are over 200 meters wide on an ore body. We're drilling, I think we've drilled about 3 or 4 kilometers of strike length, and it looks open to up to 18, 19 kilometers. So we're looking at something that instead of being this big open pit, it'll be a long, call it a long ditch. 75 meters is not shallow, but it's not going down 300 or 400 meters. And you know, if we can do economics on the shallow material, you pay off your capex, then you still have the depth potential to continue with. But I also see Decimu Lake as not a 20-year project. It could be one of these mines that's open for 100 years. So if it gets to the point of feasibility, economic assessment, there should be enough tons there that will last it for generations, as opposed to a single generation mine like Agrium's in Ontario was.
Now let's talk about something here to make a follow-up on your last interview, because I know in your last interview, you guys wanted to be strategic, and you partnered with a with a marijuana company. You were allowed to give them your ore to see if it was good as a fertilizer.
That's right.
So I see right now you're more being focused in the phosphate market. Why that?
Well, we've had 2 sets of investors in our company. Some who are pure phosphate players or pure junior mining, and some of them who I guess are a little more speculators who like the marijuana. And I guess I'm being pushed by the guys who are more true mining guys. The marijuana guys. I mean, we still have a very good relationship with Chronicare, and they are our next door neighbors to our office. So the relationships there. They've done a quick change. They were doing substrate or rock-based growing, and now they've gone 100% hydroponic. So we've had to change our plans for fertilizing, because our material is not water soluble. It is something we would put on top of the material, and as they watered, it would leach. Now they're in a pure hydroponic process, and it's quite an operation to see. But it's something we have to work on a little more to make it a more water soluble or useful product for them, because as the product stands right now, our grain size is a little coarse and would probably plug up their pumps as they're pumping the hydroponic fluid.
Now, let's talk about the share consolidation that you guys did. Why that move?
Well, it was a board decision. Our share price was lagging very badly at the time. I think we were down to half a cent. It was half a cent or under 5 cents anyway. And on the TSX Venture, if you want to raise money, you have to be at 5 cents or higher. So part of it was purely, we have to raise capital at some point, so let's do this. The other one was, well, the liquidity of the stock was maybe a little sloppy. I want to tighten it up a little bit. There's other companies out there that had been doing consolidations at the time. You always get a little bit beaten up, but then the shareholders who believe in the story continue to buy, and we've got some very loyal shareholders. Thanks, guys. And it's continuing to develop as a phosphate story now. And people have some people were in the story for 20 years. This is an old company, but we've really had it branded as a phosphate company since 2011, and that's been our focus. And we keep driving that way. The consolidation will allow us to finance and continue to go forward on that path.
Now, talking cash, is your positions in a situation where you'll be able to drill for the decision?
No, we're going to have to raise capital to do work. We actually didn't even do a capital raise last year, so we've gone for over 12 months without raising capital. Kept the treasury as tight as we can, but we are going to need cash to do work this year. We're trading almost like we're an empty shell, even though we've got these really great phosphate assets. We still have some lithium assets. It's tough. I mean, I can't say I've ever seen any market that's this tough before. Even the big gold companies, I mean, you were talking about them earlier, they are not seeing the highs they had, when gold was $800 an ounce. So they're getting beaten up just as much. They have a bigger following because all the institutions can buy them. And if you go now, TD Bank or BMO or any of the banks, their brokers cannot advise to buy a junior company. They've got rules in place. It's a high risk investment. I mean, our investors know we're high risk, but they're not in it for again a 5 or 10% return. They want a big return, and that's junior mining and pharma are really the two sectors that deliver that kind of risk reward. You don't always win, but when you win, you can do quite well.
Okay. Now, my feeling when I'm talking to you is like you have actually shifted the company's focus to be more focused on phosphate. You guys are becoming, I'm not saying more disciplined, but the vision is clearer. Yeah, I would say. So, an investors who, because that's been the third time you came here, an investor who's looking at this company right now who's willing to know, okay, what's going to be on Jourdan's plate in 2015? Good news with the Mine RNO that received the provincial approval, next to Jourdan Resources. So what's going to be your edge compared to other peers?
Well, I guess our other peers are further ahead of us, and for them to double in price is going to be much more awkward. I mean, Ariane's got a great story. They've got a great management team. They're very close to. I mean, they just need the financing now to get them to the next step. But how likely is it for them to have a double in their share price while they're building a mine? If you're looking at something that's under 10 cents a share, is it more realistic to put $1,000 in at a dime and watch it go to 20 cents, or put $1,000 in at a buck and watch it go to $2? And I think that's sort of the value play. Is if you look at the junior risk reward, we are definitely a riskier investment, but the potential for us to go up, I think, is a lot quicker and a lot higher as a potential return on investment.
Okay. So what will be your focus for this year?
Drilling on Decision Lake, and probably doing a little bit of surface work on the property next to Mine RNO and next to Ariane.
Okay. Well, Mr. Dehn, you have a lot on your plate for 2015. It's a tough market, I know, but you still keep your smile. We definitely look forward to hear back from you whenever you have any good news on the Decision Lake project.
Well, thank you very much.
Thanks a lot.